Welcome back to the Investor Professor Podcast. This is Dr. Ryan Peckham, and this is episode 143. On today's episode, man, what a week. What a week. Volatile. We have earnings. We have the Fed. We have jobs. We have the market going down a lot, coming back, going back down. And so we will figure out how to ride this roller coaster together. I'm joined today by Cameron once again, so we'll get his perspective. And should be a good episode. So get your mind right and let's get to work. Okay, welcome back, everybody. It's one of those weeks you just want to be like, man, it's a tough week. So I'm joined today with Cameron, and we're doing this like really on the fly, like just like a conversation. So I have some talking points. He has some talking points. We haven't told each other what those talking points are. So we'll see how this goes. Everybody enjoyed the format, enjoyed Cameron being here. So we got him back, make it a regular occurrence here, but a tough week for the market. A lot of earnings. We had Microsoft, AMD, Meta, Amazon, Apple, Mercado Libre, Exxon, Chevron, just a ton of companies reporting earnings this week. We also had the Fed discussing interest rates, and we had jobs number come out today, which shows unemployment rising, and it seems like everything is kind of turned on its head. Used to, when the unemployment would rise, the market would actually rally because that indicated that the Fed was going to be closer to cutting rates. Now it scares everybody, making them think that there's going to be a recession. And so the NASDAQ has now hit a 10% decline from its recent high just 3 weeks ago. And so how quickly things can change in the stock market. So Cameron, what are your thoughts before we get into this? Just your thoughts on the week.
It's been a roller coaster for sure. That sigh that you had, I think, is what the market felt. There's especially Friday like today, right?
Yeah, so we should say that we're recording this Friday afternoon. The market's only been closed for about an hour, so yeah.
Quite the sell-off going into the weekend. Yeah. So whatever weekend plans you might have had, maybe it's not going to be as enjoyable.
Yeah. The one thing though is the Dow closed. I think. I shouldn't say I think. I should just actually look it up. But the Dow closed 610 down, minus 610. At one point, it was down like minus 940. So, minus 610 is actually a rally into the close.
Came back.
But pretty brutal when you look at the components of the Dow Jones. And I will say that one of the Dow Jones components, one of the real reasons the Dow was down so much was because of Intel. And Intel's quarter was horrendous. And my goodness, was that an ugly quarter. So it finished down 26% today is what Intel finished down. 26%. A Dow Jones, I don't think the context of that, a Dow Jones component company finishing down 26% is a huge deal.
Extremely. Yeah. No, they dropped some bombs, I think, on their earnings call.
Right.
Like 15% cuts, employee cuts. They're laying off 15%.
Yeah, 15%, right.
They're suspending their dividend.
And actually just cutting it out. Yeah,
cutting it out.
They're cutting it
right?
out. And they said until their financials improve, which is
who knows?
Who knows?
Yeah. Pat Gelsinger, the CEO, surprising because he came into seat at Intel not too long ago.
Right.
And I feel like it's just, I can't imagine being him. Ever since he joined, it's just been an absolute road. He came from VMware, which VMware was a solid company. They got acquired by Broadcom recently.
Yeah.
But ever since he joined Intel, I think it's just been an absolute tear.
Well, it's been bad for so long. Like we talked on the phone about how Intel stock peaked in 2000.
Gosh.
And it has never made it back to its high in 2000. Yeah. I'm calling it. I'm predicting that Intel will be one of the next companies that actually leaves the Dow Jones. I just don't they haven't done the research and development. They're getting beaten by so many other chip companies. They're so far behind. I don't know if they're going to be able to catch up. it is rough, and plus too, and it's not only that. It's just looking at young talent. Like you're young.
Hmm.
I don't see a bunch of young people wanting to go work for Intel.
Yeah, especially after they cut 15% of their money. I don't
Yeah.
think that's very encouraging, but yeah.
Yeah, it's just a bad place. And I guess at some point, I mean, the danger is, how many people, well, we saw today, how many people were just in Intel because they thought about the dividend. And this is like the perfect definition of a value trap.
Hmm.
Like this is a poster child for value trap. It's like, oh, the stock's been beat up, it's down. Oh, but they're paying a good dividend. But at some point, you have to have some growth.
Yeah, to keep
Like
up
you
with it.
have to have some growth, and they just do not. They even get government subsidies to build out those, to build the facilities to build their chips, and it's not even helping.
It's tough. It really is, especially like I said, like optics are everything, right? The
Yeah,
headlines really drive, and the dividend for sure really crushed it. But I also think just them saying that they are gonna cut 15% of their staff,
yeah,
it just makes you wonder. It's like how much burn do they have? That's that's just overage.
yeah. I mean, and plus too, when you look at just the decrease that we've had in AMD or Nvidia, I would
Hmm.
invest in them much like so many different names before I would invest in Intel.
Most definitely.
I mean, so that one was pretty rough. So, what else do you have? You looked up how much money was lost
I was
today, right?
I was gonna say we're gonna start off on a high note on
Okay.
this podcast. Yes. So today, Friday, market as a whole, how much do you think has been sold
So
off?
August 2nd, how much money was lost today in the stock market?
Correct. Correct.
I'm gonna say 2 trillion.
Okay, that's a lot. 879 billion.
Jeez. Okay.
And for context,
Okay.
because context is everything. Taiwan Semiconductors, what's their market cap? 777 billion.
Right.
Tesla, 663 billion.
Right.
JP Morgan, 566 billion.
Okay.
And we sold off
Yeah.
$879 billion today in the
Wow.
market.
Yeah, it's amazing. It's a lot. But I also look at kind of the other side of this, right? Not to be too negative for people. But these kind of corrections, so the Nasdaq is now 10%, is now down 10% from its recent high. And so you get these kind of corrections. So
Hmm.
what everybody's thinking about this weekend is it just a normal 10% correction, or is it something that's going to be, more than that? Is it just going to be your run of the mill? Because normally, I don't know, once every 16 months, you'll get a 10% correction. It's kind of a
Hmm.
healthy thing. It kind of flushes some things out. But I mean, we talked earlier, like I was trading basically all day long, buying shares, even not big purchases, but 10 shares, like all this stuff we talk about on the podcast. 10 shares here, 5 shares here, like, Goldman Sachs down $30, American Express down $16, $17. We'll get to some of the other earnings. I mean, Amazon down was $200. One of the interesting things, Amazon was at $200. It closed today at 166. Jeff Bezos stopped selling shares when it went under 200.
Ah, okay. I didn't see that.
So
That's
yeah, so
interesting.
so Bezos, when he does like his Blue Origin,
Yeah.
sales every year,
Yep.
he quit selling when it went under 200, which is a pretty big sign, right? Like he's like, I'm not willing to sell at this price. And so I think about people who haven't bought in. Amazon's quarter, Amazon Web Services actually did very well. It was the retail side
Hmm.
where, that's where we talk about the consumer not doing as well. Are people really finally starting to stop spending money? We've seen that with airlines. Airlines didn't have good report. Maybe people aren't traveling as much. And so we finally see the kind of consumer showing some cracks. And so you see that with unemployment ticking up to 4.3%. The Fed came out on Wednesday and said there, a September rate cuts on the table. So now the guess is it going to be 25 basis points or is it going to be 50 basis points?
Yeah. So I looked that up right before this. The futures market is pretty much priced in 20% chance, 50 basis points. 80% chance, 80% probability of 25 basis points. 50 would be a lot, I think.
It would be, and their Jackson Hole, Wyoming,
August and
it comes in
August.
August, so
Yeah.
we'll actually get some clarity before that September meeting. But I think one of the things I'm always amazed with is how fast the kind of the winds of chance or the stock market winds can change from like so positive, and then everybody is so like the way that we switch from fear to greed
Oh
is
my
is
gosh.
just, even though I've been in the business a long time, I'm still amazed at how quickly that can happen.
Oh, if you watch CNBC today, it was a lot of negativity for sure. It was
Well,
violent, I think, is some of the verbiage they were using.
well, and also too though, it's just the self-rationalization of, if the market's up, they will find reasons to tell you why the market's up. And if the market is down, they will find reasons to be like, oh, yes, it makes sense because, Microsoft is down because their margin was supposed to be 30%, but it was only 29.2%, which is really what happened to Microsoft on Tuesday. So Microsoft 3 weeks ago was $465 a share, and it closed today like around 406, 407.
Yeah.
Which I think is actually a very good price for Microsoft, because when we talk about PE ratios, trailing PE or forward PE, like Nvidia is close to trading at 23 times next year's earnings, which would be, so if you haven't gotten into Nvidia, if you haven't gotten into AMD, I'm not saying you go buy a ton, but I'm saying like now is when you have to start, like as we get closer to the election, you have to use this volatility in your favor.
Definitely. And there's I think it's Charlie Munger that said the stock market is the only market where when things are on sale, people are selling.
Yeah.
And I think we're kind of seeing that right now. And kind of, I mean, we talked this last time, perspective from like my age, right? Like in a market like this, where we have such a long time horizon in front of us,
Right.
taking advantage of this time when there's a lot of fear in the market. Like I said, if you watch CNBC, it was a lot of negativity. But like you're saying, the numbers, I mean, we're not even talking 10 years from now, it's not going to matter,
Right. Yeah. Right.
So taking advantage of some of these prices now when you're younger, build a solid portfolio, I think is probably the right, you're leaning towards the right decision.
Yeah, I mean, you have to be willing to walk into the fire a little bit. And then the one thing that I constantly harp about is how most of the best days in the market are within 2 weeks of the worst days.
I'm gonna be saying that.
And I mean, I remind clients of that. I remind myself of that. And so, like on a day like today, I'm like, you have to buy something. You have to buy. Like, I will not sell into really bad days like this.
No.
I mean, it's just so. I think I told you, but I mean, I read a book that was scarier to me than any Stephen King novel, which is called The Day the Bubble Burst, and it's about the 1929 stock market crash. Oh gosh, man, it was just brutal. But the number one thing about, like, I wanted to read, like, find out really kind of what orchestrated that crash and all those kind of things. And the number one thing is, as it's not going to come as a surprise, was leverage. But I did not realize, like back then, you have to realize it's 1928, 1929. This is before all the rules were in place in 1934, 1935. Anybody could have 100% leverage on their portfolio. And I never understood how many people were literally at 100% leverage.
That's wild. And when you say anybody, you really mean anybody.
I mean anybody.
Yeah.
I mean, like, one of the examples was a guy who literally shined the shoes of like Joe Kennedy, like all the guys that were like kind of in it on Wall Street at the time. And then you also had syndicates where when a stock would go down, like a bunch of bankers would basically get together and buy a bunch of those shares and prop it up. Like things that like you really cannot have, you really can't do today. But it's also just a good reminder of, just how do those bubbles happen and things like that. But oh my gosh, at the end of the book, like people, like what you would expect. I mean, there's people jumping out of windows and people literally lost everything.
Yeah.
Like literally one of the ones, there's a guy named Jesse Livermore. Okay. He was a short seller. And he made a ton of money.
Yeah.
He made a lot of money. Like he made so much money betting against stocks that he was actually getting death threats.
I was about to say he probably feels a little guilt,
Yeah. Like he was actually getting death threats. But then after he made all his money, and he made close to like, I think it was like $40 to $50 million. And we're talking about 1929.
I was going to say back then, dollars were a little different.
Yeah, Cameron, that's when 50 million meant something.
Yeah.
And but then he couldn't stop speculating.
Oh, so he thought he had that overconfidence bias.
He had overconfidence. He ended up losing it. And then they actually put in some rules for short sellers, which took away what he was doing. And he kept speculating. He ends up losing all of it, ends up filing bankruptcy.
Oh my gosh.
And then he ends up
ending
it poorly. I'll
That
say on the
is
podcast.
that is
At a hotel that
that's got to be the worst.
at the Sherry Netherlands. Shout out to the Sherry Netherlands Hotel in in New York. It's still there. But it's just wild to read these stories, man. I mean, it's just I love reading those kinds of like stories, even though it's so hard. Like, but you know, you got to study like stock market history. How do these things happen? What's different about then versus today? I mean, all of those things. Again, but the leverage thing, going back to that, it's the one reason I will not use leverage on any portfolios.
Mm-hmm.
I mean, there's just so many. I mean, I know there's a lot of you know, videos you can watch of people making money, whatever, but there's so many horror stories on. You have to be able to. And for those of you know that maybe don't know, when you lose leverage, leverage is the fancy business word for you're borrowing money to trade. And so if you get down 40% on a holding, you're really down 80% because
Mm-hmm.
you know,
You're gonna get
and
that
so
call.
yeah, and then you get a margin call. The bank wants their money because they're not going to let you lose their money, so you lose all of your money. And on these kind of days, you got to be sure that you can basically live to trade another day and just hold on to something. If you're not leveraged, you can just hold on to it, wait, see when things get better, all of those things. So, you know,
There's a reason why some of the big names say you don't need leverage, right?
yeah.
Like it just usually it ends up bad. There's more stories of leverage ending in a bad scenario than a good one.
Yeah, well, you see hedge funds all the time. They'll have, you know, investors sometimes wonder, well, how did the hedge fund make 60%? Well, normally a 60% rate of return. Well, normally leverage is involved. They have 2 to 3 times leverage. And so they'll have one good year, and then one year where they go out of business because if it goes against you, you're done.
Mm-hmm.
So what else did you look at?
So I was gonna say, so we saw earnings this week, right?
Yeah.
Facebook, Amazon. One of the things that they kept talking about was AI spend. How
Right.
much are these companies spending on the infrastructure for this AI?
Right.
And just throwing numbers out there.
You want me to guess again and be wrong?
I think you wouldn't get this one, but $30.5 billion in the first half of the year for Amazon
Right.
in AI
Okay.
infrastructure. Meta, just in one quarter, and they're like the leaders.
Yeah.
I
Right.
mean, anytime you see
Yeah.
Nvidia in an interview, you see Meta usually.
Of course,
They're like
yeah.
going hand in hand.
Right.
$24.2 billion
Yeah.
in one quarter, the spend on AI infrastructure.
Yeah.
So they're drawing a lot of attention to that, saying like how, and both these companies are on the earnings call saying, hey, expect for that number to go up.
Yeah.
So
And even Google said we would rather overspend on
Yeah.
AI than underspend and be left behind.
Yep. And that's, gosh, there's opportunity in that position, but you also think about the tech sector, right? Like there often is this grow fast at all costs
Mhm.
type mentality.
Right.
Like we saw that before they raised rates when tech was on fire.
Yeah.
And it's so, I mean, I think it's funny, but it's insightful to think how quickly the narrative changes. So, you know, we were growing at all costs, right?
Right.
Fast as we can. Rates hit, tech, everyone freaks out. And now we're back to
Yeah.
growing at all costs.
And but they know that this is where growth is going to come from.
Mm-hmm.
And if they don't invest in it, they're going to be Intel.
Yeah. Yeah.
I mean,
It's a race. It really is like a race to the moon.
It's a race, man. It's a race. And I mean, even Meta, who did have a good quarter, they're already using AI to get their pricing right on, you know, how much they're charging marketers, you know, all of those things. I mean, it is there. And that's the one thing. So we've talked about all these companies that report, you know, NVIDIA doesn't report till the end of August.
Mm-hmm.
But you saw AMD was up today on a horrible day. AMD is up because Intel's numbers were so bad that they know where that business is going.
Market share. Who's picking it up? Yeah.
Yeah, they know who's picking up that market share. So, you know, you look at that and it's just, you know, I mean, that is where things are going to be. I mean, that's where things are going to be going. So the interesting one to me is Apple.
Oh, because the iPhone, the refresh.
Because the iPhone refresh and the smart decision to call it Apple Intelligence instead of
It's got a nice ring to
AI instead of artificial intelligence, we're going to call it Apple Intelligence. And you look at some of the features coming out on that new phone.
Mm-hmm.
And the other thing that's brilliant about Apple is they say, hey, you want access to our 2.2 billion users? You want access to all those phones? You got to give us your AI technology for free. I mean, that is one
Smart.
that is one smart and one incredible position to be in. Their cash hoard is 155 billion,
Mm-hmm.
and they're going to be able to take advantage of, I mean, it's just unreal. I mean, and Apple today was another company who was up
Mm-hmm.
on their earnings, and their earnings weren't good. Their earnings, I mean, they weren't bad. Their services were way up. The services income was way up, but it wasn't like they haven't even hit the refresh cycle
No.
as far as like the new stuff coming out with the new phone.
And we may not even. I mean, we'll barely see it in the next quarter, right? Because when is the new phone come out?
Yeah, so they'll announce the new phone in September,
Yeah.
and then it'll really be the holiday quarter.
Yeah.
I mean, start saving your money
It's
so
probably
that so
expensive.
that you can. Well, they said you have to have I believe it's an iPhone 15 or
Yeah.
iPhone 15 and above is what's going to have all the new features. But I couldn't even get through. There's like 18 feet. I mean, the photo editing, the stuff. I mean, it's absolutely insanity. The stuff that's going to be available on that, and that's just the first run of it. By the
Mhm.
way, I mean, it's not even a couple of years from now. I don't know. I mean, at some point we're going to be teleporting ourselves places. So I don't know. We'll see. You got any other companies? I got one more.
Go for it. Yeah.
Mercado Libre.
Oh, there it is. What do you call it? What do you call it?
Melly?
Smelly Melly.
Smelly Melly? Yeah. So Mercado Libre, South American version of Amazon and PayPal. Ridiculously good quarter.
PayPal, because you're talking about they process the payments.
The fintech piece.
Yeah, so they not only are the marketplace like Amazon, but the payments is solid. That is a solid business.
It's and it's growing because Latin America has been historically very underbanked.
Mm-hmm.
Like banking has not been something that people have believed in. And that stock was up $170 today. And it would have been up over 200 if the market wouldn't have been down.
Oh,
so it's an
shucks.
expensive stock. So it closed yesterday at 1609. They
Mhm.
reported earnings. It closed today at 1776. America, so we look at them, but I wrote down some of the stuff they had. So their revenue was up 42%. Their profit doubled, and their fintech users hit 50 million a month, and it is growing like crazy. And it's funny, like you said to me, you're like, why don't they talk about this company?
That's what I was gonna say. CNBC, not trying to call you out, but all the earnings were all the bad earnings. MELI, it slid right by me. I had it on my calendar, but it slid right by me. That was the one that did well that
Yeah.
day, and they didn't bring it up.
Yeah, it saved a lot of portfolios for me today.
And it makes sense why. And I got to look more into that processing, the payments, because that payments, I think, which company did it first? Was it Shopify?
Right.
Shopify, right?
Yeah.
They have an e-commerce software. That's what they're known for. But they also have their payments software, right? So they run all the payments through
Correct.
them, right? So they
Yeah.
have their own payments processing. And that is, it may seem like not much, pennies, percentages on
Yeah.
every transaction. But gosh, that's
When you got 50 million users,
that's reoccurring business.
Yeah, exactly. Go ahead.
And Shopify, that is their backbone of their business now.
Mm-hmm.
The e-commerce, they have a great e-commerce software for sure, especially for small, mid-sized business. But the payments processing piece is just that's the cash machine that goes burr.
Yeah, exactly. Well, and it's recurring revenue for them. I remember reading an analyst report, and I'm not going to say the name of the company. But I remember reading an analyst report where they talked about the payments processing, because there was a lot of businesses in South America, Latin America, that banks wouldn't give credit to or whatever. Mm-hmm. Mercado Libre is the one who gave it to them. Mm-hmm. And the analyst report was like, this is going to sink the company. This is going to be a disaster for them, because they're going to be giving, but it also makes those businesses loyal to them. It makes the people, I mean, it's all those things. Like, they extended them credit, and they've done a good job of it. But it's just a tremendous. It might have closed today to be the most valuable company in Latin America, to go above Petrobras, the oil company. And I look at it because I look at PayPal and I look at Amazon. Mercado Libre's market cap, even after today's gain, is only 90 billion. And I know I say only 90 billion, but Amazon's above $2 trillion.
Perspective, right?
It's a little bit of perspective. And I know, but I look at that and I go, man, the runway for them is still so great. So Mercado Libre, finally, one company that did well. Exxon reported numbers, good numbers. Chevron was a little bit weak. Chevron's having trouble closing their Hess Hess deal. They're in a lawsuit with Exxon over that. Oxy dropped to 57 today, and then it started getting, it started getting strength, and that's because Buffett has. I'm telling you,
Solid position.
when Oxy goes under, like basically, I think it's 58, 57, Buffett starts buying it because he
Good.
has warrants. He has warrants at either 57 or 58.
Great indicator, I would say.
Yeah,
There's some traders that will just follow that alone.
of course, like because they know he's going to start buying. I think he has the right to buy up to 50% of Oxy. He already has approval to buy up to 50% of Oxy. Yeah.
Yeah, that's probably gonna be. Can you imagine Oxy being the next See's Candy in his portfolio? Just a company that has just taken off.
Yeah, so we talked about how the Buffett meeting in Omaha, like everybody always asks if he's going to buy all of Oxy, and of course he says no because everybody would front run him.
Yeah.
If he said yes, I'm going to buy Oxy.
Yeah.
I mean, everybody would go buy Oxy.
Oh,
So if he does it slowly, methodically, and then all of a sudden people look up and it's like, oh, he owns 50% of the business.
he's basically playing behavior, right? Like he
Yeah.
knows people will get bored. Because when he first announced it, where was Oxy at?
Right.
It jumped quite a bit.
Of course.
And he knows human behavior enough to know that people will get bored. And you know what they're going to chase? AI.
Yeah.
And
also,
he's going to buy Oxy.
yeah, exactly. And they just don't have any patience. And that goes back, I was talking to somebody earlier this week, and I said, like, stock market, investing, all of those things. It literally is a real life. It's just delayed gratification. It's like, are you willing to delay gratification? And that's good. Investors are always willing to delay gratification. They're willing to wait 2 years, 3 years. Like
You have to.
Like we talk about the positions that we hold for clients, like, hey, this is a play for the next 2 to 5 years. Like I think about Kava, the restaurant. I think about 2 to 5 years out. Like it's not something I'm looking for to have a real big impact in the next year or two.
On the front end, it seems like a long time, but 2 years goes by faster than you realize, right?
Yeah.
Like just even looking at positions that I had 2 years ago and where they are now,
Yeah.
it didn't feel like 2 years. But on the front end, it's
Yeah.
like, where is this going to be in 2 years?
Well, then, I mean, you bring up a good point because you don't have, being 26,
the
like,
perspective.
but also like you look back at some of those positions you started 2 years ago, and now you look at the cost basis and you go, I don't know if I'll see that again.
I have, what do they call that? Anchoring bias. I'm anchoring myself
Yeah.
to the price. Yeah. Like, Google at $89. Yeah. That's going to be tough to see that one again. No, it totally is. And that's from a younger person's perspective. That's the part where like times like this is actually, I mean, it seems nobody likes open up their Schwab app and seeing that they're down.
Right.
Nobody likes that. But there is like, we're learning a lot of good lessons right now.
Yeah.
And just being in the market, and even if it's not much, but just being in the market and experiencing, okay, this is kind of the wave and getting used to that, I think is super valuable.
Yeah. And I wonder like what'll happen next week. So like one company that I really like is Procter & Gamble. And I've talked about, every class I've ever taught, I've talked about Procter & Gamble. Like you cannot go to a grocery store and not spend money with them, right? They were at $69. They report earnings. People didn't like the quarter. It goes to $60 a share. Today, it's right back to $69. So, it's just sometimes you got to sit on your hands. McDonald's is another one. So McDonald's hasn't been doing well. They reported earnings. It's back up to, 275. It was at 250. I bought it a couple of weeks ago at 256. People didn't like it. You just got to, like, sometimes you just got to be willing to just go watch a TV show, mow your grass, and just leave it alone.
Sit on your hands.
Sit on your hands, man.
100%.
And I think in this time where we have, I'm going to bring up one more indicator before we close. But when you have this kind of political uncertainty, you have a little bit of economic uncertainty, like it's almost like when you're driving in traffic and the lane next to you starts moving and you switch over and then the lane that you were in starts moving, and you got to be real careful about changing strategies, switching lanes. I mean, a lot of times that will cost you dearly.
That is a great analogy. That's exactly probably the feeling, because we all know that feeling when you move over and you're like, dang it.
Yeah. It's like, oh, God, I knew I should. That's the worst feeling, is when you sell out of a stock or whatever, and then all of a sudden you look and it's up $20.
Yeah.
And you're like, I wasn't patient enough. I mean, you really have to, like, and that's something that's just a learned behavior of like, geez, man, like you got to be really careful. I always think about Buffett. I mean, bring up Buffett, to bring up Munger, but when Warren Buffett tells you, I would be richer today if I would have never sold anything.
A single stock, yeah. And he had positions that went to zero.
Yeah, yeah. I mean, like that is, and he tells you like those numbers don't show up in the numbers.
Yeah.
Like that doesn't show up on the sheet. It's errors of omission, right? Versus like things that you can actually measure.
I think we're gonna see that too. Like we have Uber, right, reporting on Tuesday.
Yeah.
This was a tough week for Uber.
Yeah, it was.
The stock market, right? So you had this little bit of sell off, depending on what Uber looks like next week. They have like Uber Eats, right?
Yeah.
And we saw, what was it, DoorDash?
DoorDash had a good quarter.
Great quarter, which surprisingly, right? Because you
Yeah.
would think that would be somewhere where if that's not going to make the budget, you cut that out of the budget, but it didn't. People still like it.
Laziness is strong,
It's
my
strong.
friend.
So now I'm curious how Uber is going to look, right?
Yeah, I worry about Uber. I'm invested in Uber. I like Uber, but with travel down, I don't know. We'll see. It'll be interesting. They need to. I liked them because they got to profitability. Last quarter they weren't profitable, and it's like, man, you got to stay profitable. Like you got to stay profitable. Can they stay profitable?
Is everything.
Is DoorDash? I think some of the sell off today was like people are worried, is DoorDash taking business from
Market share
from Uber Eats? Can they make it up? I mean, that's what I'm going to be looking for in that quarter.
Sitting on your hands.
Yeah, sitting on your hands. I mean, so that one will be interesting. So the other one that I wanted to bring up, the other thing I wanted to bring up is unemployment ticked up to 4.3%. So there's something called the SAHM rule, SAHN, and it's a lady named Claudia San, right? So they interviewed her today, asking her. So the rule is basically if unemployment goes up more than 0.5%, I believe. Is that right? Am I right?
I think so.
Okay, if unemployment goes up more than 0.5% in a year, then basically there's always been a recession. So today, going to 4.3, unemployment last year was 3.8. So that would mean that the rule is basically triggered and that there's going to be a recession. That has always preceded a recession. So they interview her today, and they ask her, "What do you think?"
What did she say?
What do you think she said?
She probably stuck to her rule, right? I missed the interview. I didn't see it.
Yeah, I know. But she said no.
She said no.
She said no.
Oh wow. What was the reasoning?
So she said that COVID has skewed so many numbers.
Yeah.
That she goes, you can't take a single data point. She goes, if it continues to happen,
Maybe.
it would be nervous. She goes, I'm hoping that unemployment will find it'll hit a spot, basically maybe 4.4, and it'll stay there. She goes, I know the rule's basically named for me, but she goes, but COVID has skewed so many numbers. And it's one of the ones we talked about was how every single time you've had an inverted yield curve where the 2 year has gone above the 10 year, there's been a recession, except right now.
Yeah. There's so many. I was gonna say
there's so many.
There's so many rules. Like the other headline I saw today was the at rate cuts, right?
Yeah.
Precedes the recession.
Right.
They show this graph, this scary looking graph. And there's all these different rules, but it's funny. They only bring these rules up when it's convenient. I've noticed. Like that's the first time I've been watching CNBC for I don't know how long. I've never heard of that until today. Right. And they were just burning that out the whole day. It's like we like going with some new material.
Well, it's almost like CNBC, like a lot of these things that you feel like it's like politics, right? They give you the numbers that are going to keep you glued in. But even when we talked about like the podcast that we did in 2022, when we talk about recessions, I mean, a lot of times by the time they announce that a recession is here, you're already halfway through.
Yeah. Yep.
So, you got to be very, very careful and diligent. And you look at like always, you invest in the best companies, and those are the ones that come back quick. And we saw that this time for sure. When you talk about buying Google at $89, now it's $165. We talked about buying Amazon at $91, now it's at $167. It was at $200. I mean, there's more money that has been lost, like, waiting for the next recession than has been lost in recessions.
Going back to it, we should probably title the podcast this "Sitting on Your Hands." Right?
Sitting on your hands. We've used it already.
Yeah.
What else we got? What else we got?
Something similar to that.
Yeah,
I don't know. Just don't click. Don't ring the bell.
Don't ring the bell. That's a good one. Yeah. I mean, you have to be. And again, when everybody's fearful, you got to be willing to buy something. Go buy, go invest in something that you've been looking at.
And here's the thing. So I will say this in my experience. I'm kind of kicking myself today because I didn't buy probably as much as I could have,
Mm-hmm.
right? You don't have to go all the way in. So if like today's like today, right?
Yeah,
Where
you
you're having
shouldn't.
so you're not, you get a little eager, you see some things on a discount, right?
Mm-hmm.
Do a little bit today, do a little bit Monday, do a little bit next Wednesday, and you can just spread it out. And what you're doing is you're spreading out that risk.
Yeah,
And
and
you're guaranteed to
I
get
would,
a
I
good
would
buy.
totally, I would totally be buying small buys up to the election.
Yes, 100%.
Because there's going to be some stuff that comes out. Politicians say a lot of crazy stuff. They tank a lot of stocks. I mean, you got to be willing to say, okay, if I want 100 shares of this thing, I'm going to buy, or 10, I'm going to buy 25 shares at a time.
Mm-hmm.
And you just got to be willing to be disciplined. And on bad days like today, you just hold your nose and you click the button and you invest.
Yep.
I mean, you just got to, you take the emotion out of it and you just have to be, this is what I'm doing. Because you're never going to time the bottom perfectly. You're never going to time the top perfectly. It's really you're winning over time. Like you're winning, as we go along. So, you got anything else?
I think that's it.
You good? All right. So we'll end it here. We'll check in with you next week. As always, don't mistake activity for achievement, and we'll see you next time. Thanks, everybody.